Welcome to the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way for you to grow your wealth. I'm your host, Brett Swarts. In each episode, I'm joined by some of the best real estate, financial, wealth, and sometimes tax minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. I'm excited about our next guest. He is the CEO and founding member of the IRS Trouble Solvers LLC. It's an organization that's focused on helping individuals and businesses with wage garnishments, tax liens, delinquent tax returns, advisory, bankruptcy services, and more. He takes a very different approach on each unique case and develops a thorough plan that will help resolve tax problems effectively and efficiently. Please welcome to the show with me, Ben Gold. Hey, Ben, how you doing?
I'm doing great. How are you today?
I'm fine. Are you okay if I'm standing today? My back is like the fourth interview, so I'm going to be standing here. I might sit halfway through, but is that cool with you?
No problems here. Just be comfortable.
All right. Sounds good. So for our listeners getting to know you for the first time, would you give us a little bit more about your background and your current focus?
Yeah, definitely. So we have two offices, one in Alabama, one in Chicago, and our focus is helping people with IRS problems and helping them through different processes be able to deal with strategies and using strategies in order to reduce the total amount that they have to pay the IRS when they find themselves in a difficult situation with the IRS. A lot of our clients are great people that essentially just find themselves in a difficult situation. So normally we're able to help them by using proper techniques and strategies, reduce their total tax debt. So the IRS doesn't come and try to take what they have or to try to garnish their wage or put levies on their bank accounts and levies when they just go in and take the money out. What a lot of people don't understand is a lien on property. A lien is imminent, and that means that it's going to happen no matter what. If you owe more than, get this, only $10,000 to the IRS. So if you owe more than $10,000 to the IRS, they will lien your property, or they may lien your property, depending on certain circumstances. More times than not here lately, they've been slower at liening properties strictly because of the COVID-related issues. So if you owe more than the $10,000, you probably have a lien. There are certain techniques that we can use if you owe less than $25,000 in total to get those liens off faster. Now, in dealing with real estate and real property, those liens create big problems if you go to sell those liens and try to take that equity out of that property. So the goal is definitely for us to use those strategies and come to us before the IRS starts sending you those really nasty letters or somebody shows up on your doorstep.
Got it. Great summary. And I can't wait to dive into some of the tactical things that people can do right now if they're facing some of these challenges. Before we go there, though, Ben, I want to take one step back, right? I want you to picture the college days, maybe the high school days. I believe we've all been given certain gifts in this life, and these gifts have been given to us to be a blessing of help to others. Some people call them strengths. Some people call them superpowers. I believe they're God-given gifts. And so I'm curious, what are those one or two gifts that you believe you were given, Ben? And how does that help how you help and bless people today?
So I'm a very diligent person, meaning I'm a hard worker. In high school, I was a two-time state wrestling champion. In college, I was a two-time All-American flag football referee. And I did that through, diligence and hard work. And I believe that through diligence and hard work, it usually beats talent. And so, I think that some of the God-given gifts that I've been given is to just sort of grab onto the situation and hold on. regardless of what the outcome looks like, and sort of be the bulldog, sort of latches on to the problem. And the key is to not give up. In dealing with the IRS and what I do, you have to have sometimes a long-term approach in how we deal with it. So I think those talents that I've been given is essentially the fact that, you work harder than everybody else. That way you can have the experience like none other. And that experience is one of the things that gets you through to the next type of issue that you're dealing with.
Beautiful. Yeah, I love the perseverance. I love the hard work, and I love just not giving up. And that's certainly, when you're with the IRS, you want to make sure you have someone in your corner like a Ben Golden to help you through in the long run, because that's a scary space to be in if you're having challenges with the IRS. That being said, let's dive right into that. There's some misconceptions about taxes that could get in, that can get you into tax problems, or or things that can come around. So what's some of those top misconceptions been when it comes to tax resolution with the IRS?
A lot of people think that they owe too much money and they can't get any type of resolution. When they don't think they can get a resolution, they procrastinate. They sort of put their head in the sand a little bit longer and don't deal with it. One of the biggest no-nos that we have is people think that they don't have to file a tax return. Look, you should file a tax return. Make sure you go to a professional every single year and see if you should, because that's one of the quickest ways to get in trouble with the IRS is not filing. If you can't pay, you still need to file. You still need to make sure that you do your due diligence. And like I said, go to a professional. Don't try to save a whole bunch of money by doing it yourself, especially if you don't know all the ins and outs. And don't go to somebody that, opens up for a portion of the year and then closes down for a portion of the year, or they don't focus strictly on doing tax preparation or tax work. Not only should you go to a professional, and not only should you file every year, but file on time. That's a big issue. The penalties for late filing are unbelievably huge. So 25%, up to 25%. So I really encourage people to file timely.
Got it. So timely, professional, make sure it's someone who's year round and you're doing it on time. And even if you're having challenges with the IRS, make sure that you don't just stick your head in the sand, think that you don't have to file and don't have to pay, because they will find you. Don't do that.
So let me ask you a question.
Yeah, sure.
If you stick your head in the sand, what's in the air?
You tell me, Ben.
Your derriere, right? Your derriere in the air. So be careful. Don't let somebody else come around you unprotected and you be unprotected. You need to take the protection personally and make sure you stay protected.
Excellent. Okay, so that's step number one, right? I guess preparation and making sure you're filing timely every year with the professional. I guess step number two, let's just say a friend or a family member finds himself in some challenges, right? And they reach out to you, Ben. What's the next step to help resolving these challenges?
So the IRS does not want to have to deal with somebody that they feel like they are essentially having to chase. Make sure you talk to the IRS and correspond with the IRS through a professional. Now, if you owe quite a bit of money to the IRS or you're under audit, respond timely. If you do not timely respond, it'll be one of the biggest problems in dealing with the IRS, especially if you have an audit, especially if they're asking questions and things of that nature. Because if you don't, they're going to assume that you're trying to neglect your responsibilities. 89% of every audit has a change. That means that the IRS may have some type of change. However, 67% of every single audit that the IRS does is non-responsive. So most of the audits that have a change are because people don't respond at all.
Interesting. So 89% of every audit has a change, and 67% of every audit is non-responsive. And when you're saying non-responsive, mean like they've done an audit and then the individual's just not responding? Is that what you're referring to?
The IRS is asking questions, and the person just doesn't respond to the IRS's letter saying, "Hey, can you explain your charitable contributions?" And if there's no response, the IRS says, "Hey, we're just going to do away with all of them." So they just take it completely off, and now you owe more money. So,
All right. Let's assume all of it 100% wasn't given, even if it was you were off by, let's say you said $10,000, but you only gave 9,000, and they're like, "Hey, can you explain the 10,000?" And they're
Yep.
non-responsive. Then they're like, "Fine, then all of it's due," and we're assuming that none of it's been given. Is that what you're saying, Ben?
Exactly. And to put it in, your perspective, if you have a transaction where you say your basis is $150,000, the IRS may question the basis. And if you don't have the basis or the expense of the sale or something included in there, then they may say, okay, we're not going to let you have any of the basis. And so you're going to pay tax on the entire amount. And that could be a change.
Wow. So the worst thing you can do is to be non-responsive. So what you're saying is definitely communicate and definitely, say, here's what I have. And by the way, and if it was you're off, it was 150 instead it was actually 160 or it was 145, right? Okay, then make that right and pay the difference, right? Or perhaps
Yep.
you get a refund. I guess the other way it could go, they could say, oh, we were actually wrong. Is that true, Ben? Maybe people don't realize that and go, oh, my basis is actually 180. I forgot about that $30,000 roof that I put on. Right, where the IRS give a refund in some states. Or keep
That's
going.
right. Or I forgot to include the cost of the real estate professional that sold the property, or something like that. Because of that, your basis or the expense that you paid to sell the asset, you have less of a gain. And yes, you definitely can get a refund back. Look, the IRS wants it right, and when they ask questions and you don't respond, they just assume the worst.
Yeah, that makes sense. That makes sense. And I've also heard that it's when we're dealing with the IRS, it's the one part of the law, and correct me if I'm wrong, Ben, that basically assumes you're guilty, right? Versus innocent until proven guilty. It's just like, no, you're guilty, and then either provide a tax return or provide evidence. Otherwise, you're guilty. Is that a fair summary, or could you correct me there?
So I would just say that the burden of proof is on the taxpayer. It's not that you're guilty, is that the IRS looks at the burden of proof for you to be able to prove your position on the return. Uh, and if you don't prove your position on the return, they just take your position away.
Got it. So the burden of proof is on the taxpayer. That's a better way to put it. Not that you're guilty, but they're just gonna take that away, and it's actually even worse than, again, like you said 150,000 was the basis, but really it could be 200. But if you don't say anything, like, oh no, because now they're going to say zero, and it could actually win in your favor. So it's how important. I guess the next part would be, why aren't 67% of the people responding, right? What is off? Either the email address, the home address, or what are some things that we can do right now? Because I imagine a lot of those people want to respond. I don't know, maybe you can tell me those stats, but either A, they're not getting the notices, or B, what's going on there? Why aren't they responding?
So the truth is that people are afraid to open the letters from the IRS. They see something from the IRS and they're like, oh my gosh, I'm fearful. I don't know what to do. They think I'm doing something wrong. And so the thing that they do is nothing instead of opening that mail and trying to respond to it. It could be as simple as, them wanting to update an address or something of that nature. It may not be all bad news. So people wait and don't respond out of fear. Remember, fear is like a mile wide and a mile high, but paper thin. If you can just push through that little bitty paper thin fear, then you can go through it and say, oh, well, that wasn't too bad. It's sort of like doing the very first transaction from a capital project, either purchasing that home or trying to go through and do a rehab of that home. It's the first one that you're so very afraid of because you've never done it before. You got to push through that fear because you're never going to get the reward unless you take the risk from a real estate standpoint. However, if you don't open that letter from the IRS and you're fearful of that, then bad things will happen.
Got it. Okay, I think we've gone through that, folks. Make sure you're responding. Open letters. Don't make the mistake. Okay, so now let's shift a bit here to maybe some high net worth individuals that don't necessarily have tax challenges per se, or but maybe they could. Or what are the biggest maybe one or two things? Maybe we can talk about the estate tax, right? I think that'd be a good one, Ben, right? Because I think some folks. Either they don't think about it as much or it's not on their mind because they go, well, if I have this stepped up basis bin, right, and I just hold on to this property, I can walk away, capital gains tax free. But if your estate is greater than 22 million married or 12 million single as it stands approximately right now, although in 2025 those are set to expire and most I think would think it's going to cut back in half, you're dealing with estate tax, which is 40% of your total estate, regardless of the stepped up basis. So would you just touch on estate tax, Ben, and some thoughts on that?
Yeah, definitely. I mean, remember, the exemption is a personal exemption. So if you're married, it's not really 22, it's 22 between the two of you, but it's a personal exemption. So a lot of the times we still have to do an AB trust. So the first $11 million is encapsulated, so it's not taxed for state tax purposes. And then the secondary piece, since it's personal, is also encapsulated from the first. So stepped up basis, the key there is a lot of people don't, especially if you don't have the 22 million in the estate, a lot of people do not do a valuation to know what their basis is. And that's the number one key. If you have an estate that's like $5 or $6 million, get everything valued. Get everything valued. That way you do know you have a step up basis. And guess what? That goes both ways. So if you sell the property and it's at a loss, you get to deduct the loss, or the loss will offset other income that you have. And the second thing that I would tell you for higher net worth, it's not really estate related. It is review your tax returns that you entrust your professionals to do. I'm dealing with a high net wealth individual right now that's being audited, and their NOLs of $9 million are being disallowed. And it has everything to do with, well, what happened in 2005, 6, 7, 8, 9, and they're being audited in 2019 taxes right now. So from an estate standpoint, get everything valued from a legal person that does it for a living, an appraiser. Don't just say, well, Uncle Joe said it was worth this. That's not the way that it works. And then above and beyond that, make sure that you review your tax returns properly every year as well.
Wow, that is scary. A 2005, 6, 7, 9 million LOL. Right now, are you getting audited in 2019?
Yeah, and they sold property. They sold property and had a gain of over $1 million. Mm-hmm. And the IRS is coming in and saying, okay, your NOL for $9 million is not going to work right now. We're going to tax you on that $1 million, and it's a short-term gain, so it's taxed at ordinary rates. So, I mean, they have a $500,000 tax plus penalties and interest. The penalties are over $110,000 just in that 1 year. So, always, and this is a little bit further than what your question was, always keep your tax returns. Always, 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 and forever. The documentation that you have on sales of property, always keep those too. You don't have to keep all the receipts for a tax return, except for 7 years. You keep them for 7 years and then you can do away with them. But if you have something that proves your losses year after year after year, you want to make sure you keep those, because those losses could become into question in one day. And you want to be able to show that you have ability to deduct those losses.
Got it. So always keep all your tax returns. Never do away with that. Right. Receipts after 7 years, you can get rid of that. Mm-hmm. And then keep anything that's going to prove losses, right? So like a real estate sale, like a closing statement, right? Or
yep. or the purchase and sale of the closing statement.
Yeah, purchase and sale agreement.
And if you have large improvements, keep those large improvements, because normally you have one contractor to do most of it, or you have one general contractor to do most of the work. Mm-hmm. So keep your receipts for those general contractors, especially if you have that additional item for your basis.
Got it. Yeah, so much wisdom, Ben. And this has been Golden, by the way. You can find him at goldentaxrelief.com. That's goldentaxrelief.com. Got it. Okay, so we covered quite a bit here. So, and for those who want to connect with you, Ben, and get help on a certain thing, what's the best place and best way to connect with you?
So you can call us at 844-229-8936, and that's our Alabama office. You can go to our website, goldentaxrelief.com, or you can email me, ben@goldentaxrelief.com.
Excellent. So we're going to dive in now to the second part of our show here, which is focusing on the biggest frustration with capital gains tax options. And it could be tied to the 1031 exchange. It could be tied to the opportunity zone. It could be tied to how do you defer capital gains taxes on the sale of, cryptocurrency or a primary home. I don't know what it is, Ben, but given that your energy, your time, and your focus on tax, what's been the biggest frustration for your clients or yourself when it comes to capital gains tax deferral options or lack thereof?
I remember a couple years ago, the TCJA, the Tax Cuts and Job Act of 2017, it changed the 1031s for them to be specific to real estate related items. Back in the old days, I did a 1031 on a shrimp boat one time. So a guy was purchasing a shrimp boat, sold a shrimp boat. We did a 1031 on it. He saved him, hundreds of thousands of dollars in taxes. Make sure you meet your 1031 requirements so far as your intermediary, your dates to receive, replace. Make sure you make all those dates. The biggest frustration is the fact that people either miss their dates or they receive boot. And if you receive boot in the transaction, that part of the transaction is taxable.
Yeah, absolutely. And by the way, we call that the shotgun wedding, right? The 45-day identification, 180 days to close, 1031s. And then, they took away they limited it to basically investment real estate, right? And so you're kind of just like, if you have investment real estate, and by the way, Biden, and I wonder what you're thinking about it, the administration, they're talking about, making it even more limited, right? Or eliminating it, or even eliminating the stepped up basis. We do have a solution, by the way. It's an alternative called the Deferred Sales Trust. You can go to capitalgainstaxsolutions.com to learn more about how to save a failed 1031 exchange and how to defer taxes on just about any type of highly appreciated asset. But I'm curious, Ben, on when it comes to Biden talking about potentially taking away the 1031 or eliminating the stepped up basis. What are you telling your clients and folks that are curious about that right now? What are you saying?
So before I jump into that, I hope you don't mind me saying just one thing in regards to 1031. It's all about planning, people. You must plan, even the deferred strategies that you're talking about right now. You must have a plan going in. You cannot, or it's very, very, very difficult to go backwards and do what we call retroactive planning. So people, you must plan. It's like Ford said, if you plan to fail, you fail to plan. Wait, if you fail to plan, you plan to fail, right? So the key is planning on that side. Now, Biden, I can only tell you what I've heard in regards to the administration and where they're going. And my understanding is cap gains rates, they're going to go from 20 to 40%, to essentially take away the investments, additional taxes on high ticket items, doing away with or limiting more of the 1031s, and then also doing several other things to limit what I would call or consider a windfall transaction. A windfall transaction is when you're first getting started in investing. A windfall transaction is your very first one. You had a windfall of X number of dollars, and now because of that, you now have more money to use to invest going forward. So the key is to plan properly in order to reduce those taxes. And that's really the focus that you should try to worry about, because regardless of the administration, regardless of who's in, regardless of who is in control of Congress, we can only go based off of what our tax laws are right now. And more times than not, tax laws change right now moving forward, and they're not retroactive. So the key, people, is planning exactly where you are.
Yep, 100%. Thanks for sharing, Ben. And that's exactly right with the deferred sales trust. But you got to set it up before close of escrow, even before contingencies have been removed, or at least as long as all contingencies have been removed. There's got to be at least one. That is super important. Although if it's within an exchange company, we can also we can rescue kind of a failed 1031 exchange. But you got to make sure you get with us early and we get everything set up and we follow it properly.
Yep,
Otherwise, exactly what Ben said, it's too late, and we'll tell you it's too late, and you got to pay the tax. That being said, Ben, are you ready for the lightning round?
I am.
All right. So, knowing what you know now, Ben, if you go back to your 25-year-old self, what's the one golden nugget that you would make sure that you would do?
Spend more time with my family.
How many kids do you have?
I have two, 18 and 16. I work a lot still, and I would probably go back and tell myself, you can never get that time back. Cherish it.
Got it. Love it. I got 5 kids, and that hits home. We're going to be going to Orlando coming up for a big trip to go see that Disney guy over there and some cool
Enjoy
stuff.
the mouse.
Yeah, yeah, for sure. Second question: what's the one book you've recommended or gifted the most in the past year?
Um, I absolutely love the book Giftology. It's a book that it essentially says that you should keep gifts in front of you for employees, for clients, and for people that are close and near and dear to you. Because believe it or not, people just don't do that nowadays.
So it's called Giftology. Is that what you said?
Yep. Giftology. That's
Okay,
right.
that sounds cool. Yeah, I'll check that out. Next question. What are you curious about right now?
I am a nut when it comes to learning and reading about the IRS code. And right now, I'm focused on something called TFRP, which is trust fund recovery penalties, and how do we have defense on payroll penalties and payroll taxes and things like that for owners. So I'm trying to dive in as much as and learn as much as I can about that right now.
Cool, very cool. And what's the one leadership quote or theme that you strive to live by?
Um, hmm. So far as theme, I heard a podcast the other day that talked about trust and the three different items inside trust and being trustful. So what does that look like? That looks like, number one, you've got to have credibility, you've got to have rapport, and you've got to have reliability. So I'm really big and thinking about how can I relay that back to my clients and communicate properly and build that trust not only with the IRS but also with the clients, and make sure that is important and sort of top mind for making sure that our client expectations are met in everything that we do.
Beautiful, love it. Um, Last question: after all your success and helping many people develop tax resolution plans and communicate well with the IRS and get a lot of that stress and that burden off of their shoulders by making right what needs to be put right. How do you stay centered in your values, Ben? And how do you stay encouraged to reach forward and charge for new goals?
I'm a very religious person, so I stay true to my faith. I stay true to the morals and ethics that were instilled in me as a very young person, as a very young man. And I do everything as if I do it unto my Lord. So I want to make sure that I stay centered in that, and as long as I'm centered in that, then everything else is going to come out okay.
Beautiful. Amen, brother. I appreciate that. Appreciate you sharing. Appreciate you being on the show. For our listeners who want to get in touch with you, would you remind them one more time what's the best place for them to connect with you?
Yeah, send me an email at ben@goldentaxrelief.com. You can check me out on my website. URL is www.goldentaxrelief.com. Or you could just pick up the phone and call me, 844-229-8936.
Beautiful. Well, Ben, I want to thank you for being on the show and sharing a bit about your story, a bit about your expertise, and we are better for it. I want to encourage you to keep using your gift of perseverance and being a bulldog for your clients to connect and solve challenges when it comes to IRS tax challenges. Okay. And I appreciate you being on the show. And I also want to thank our listeners for listening to another episode of the Capital Gains Tax Solutions podcast. As always, we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust and or getting with someone like Ben Golden to help you with tax resolution is the best way to create and preserve more wealth. If you want to learn more about the Deferred Sales Trust, you can go to capitalgainstaxsolutions.com. Or if you're a business professional and want to learn how to use the Deferred Sales Trust to grow your business, you can go to experttaxsecrets.com. We appreciate you. Please rate, review,